$150,000 in no doc business credit cards, business lines of credit, and more funding to accelerate the growth and expansion of your business, to help you pay down other debt, to help you organize yourself better, and much more. Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, business loan broker expert, pre-underwriter/underwriter, who's been able to help a lot of business owners and their businesses sustain growth, continue to grow and expand, be able to understand their cash flow, necessities, profitability, and many more in different industries, in a wide variety of nets, to really further understand how to develop their operations, business management, and a lot more. And one thing that's different from me, there are many, but one I want to point out, is that I value you first as a person, first and foremost, and then second, in your business. I'm not your traditional broker where they're trying to over leverage you, over promise and under deliver for the most part. Not every one of them, but for the majority. People out there only looking out for themselves, trying to make the most amount of money off you. I'm not in it for that. I'm in it for impact. I see the development and the changes you make in your own business to also affect your clients, the people that you service, your customers, and the happy face that's put on them, what they're able to walk away from, and then helping out the economy as a small business and even larger to be able to grow from that and be able to have a sustainable impact. And I have my own businesses. I have one in the digital marketing agency, lead generation, health affiliate marketing, other affiliate marketing ventures, other verticals and ventures. And this has been my primary focus and mission as a business funding expert. And I value loyalty, respect, accountability, responsibility, flexibility, resilience, integrity, honesty, trustworthiness, community, fitness, spirituality, and many other things. And so I'm a very analytical, cerebral, introverted type. I talk less, I do more. In fact, earlier, before I got on here, I was reviewing a lot of soft credit pulls. I know how to read through that, so I'm going to get into a little bit about what I look for there, not entirely, just give you a little bit, like a snippet. But I've been going through those reports earlier. I also looked at bank statements, tax returns, P&L, balance sheets, debt schedules, personal financial statements, and many other documents. Excuse me, my introvert there. And so I know how to analytically break things down, calculate, do numbers, cash flow, profitability analysis, amongst other things. And so I can really sit in front of a computer without speaking and do a lot of brain work. So back to this subject, the 150,000, where is all of this coming from? How do I get my hands on 0% interest business credit cards for my real estate business, healthcare technology, or healthcare technology? You are in retail, restaurants, you're in e-commerce, Amazon, you're a coach, consultant, trucking, construction. The list goes on and on. This is wildly and widely available. And I'll get into some of the requirements. But just imagine yourself getting your hands on 0% interest business credit cards, even with a balance transfer. You can move personal debt over to the business credit card or credit card accounts. And that'll allow you to put it underneath your business that takes it, instead of your personal. That's a liability, especially when you don't have an LLC or a corporation, H corporation, C corp, S corp, etc. With these cards, it allows you to also liquidate the cash out of, depending on the cards, depending on the percentage in that, out of that, and be able to use the cash on hand. You can have cash on hand and in the banks, enough liquidity. That's also a great thing to have. Cash is king. Credit is king or queen. You could say one by one. It just depends on the operations of your business, who you need to pay, vendors, suppliers, you have other people, subcontractors, whatever you're doing and you're making payments to and from, it's good to have cash on hand. Other times it isn't. So just keep that in mind. There's different business credit cards out there. I'm not going to start naming all of them, but you have Chase Bank, Bank of America, US Bank, Wells Fargo, PNC Bank, Truist Bank, Key Bank, And what ideally the structuring behind getting 0% interest business credit cards is to start off with the grade A tier banks and move our way down regional, then to community, lower tier, regional, community. And so we're doing what's called credit card stacking, is adding multiple business credit cards on top of one another to get you the maximum approval and approval odds. But before we can get into any of that, we need to know what it takes to qualify. What can we do to get our hands on multiple business credit cards at once from different credit bureaus? Well, for one, be cautious of just going in and applying anywhere and everywhere. We want to be strategic at this, because if you have a hard inquiry that's deserving of it, then you want to be cautious that it appears on that credit report. Now, when you look at things and removing things that you were declined for, that's a whole another thing and a whole another subject. Is it on your personal or on your business? Things like this that you're evolving into over time. So I have a few things here that I do want to get through. So I have my laptop in front of me, and I don't really even need to look at this, but I will use this as reference. And if you've seen my content in the past, I do this from time to time so I don't miss a point. But for anything on business credit cards, this may involve personal credit cards at 0% or business credit cards at 0% because what you have to understand is, if you want to add multiple business credit cards at the most amount, people will always ask me, how do I get 50K to start off with, or how do I get 100K? What do I need to do to improve my chances of getting a starting card or cards, a couple, at least 50,000 each, or combined total? Well, it depends on the bank, depends on the banking relationship, the tier of the bank, depends on if they are more conservative or not. Like a US bank is more conservative, where they may only approve you between 10 to 15K, as opposed to 15K to 25K if you have something that's more aged, or you have a relationship banking manager, or over time that grows because you have a personal account first. You have a personal credit card of at least a high enough of a limit, I said 5 to 10K or so, even more than that, then that'll help you in the door to get a higher approval on the business side. So with a lot of this said, whether you're going through a US bank, Chase Bank, Bank of America, Key Bank, whichever ones they are, I would start off by opening up a business checking account, having an LLC at least. If not, it's okay, but it's better to have that. As it ages, it's going to be helping you get higher approvals, and there's going to be other stipulations. But having those accounts open and having like at least a personal credit card you get from each one of them, if you haven't already, is where I would begin. But more importantly is understanding what bureaus they will pull from. Like a Bank of America, where is it going to pull from? If it's on the personal, if it's on the business, TransUnion, personal could be TransUnion, Experian, etc., depending on the location and the area, and a few other things included. Things change time to time from there. So you'll see that. And then if you're looking for Chase, where they're going to pull from, primarily Experian. So if you're going to get Experian here, Experian there, or TransUnion, Experian here on the personal, or if it's even Equifax, depending on the location, now you have one inquiry per, or you have one here, one there, and one another one, or two underneath one, depends on how you look at it. So having a Chase Bank, Bank of America, US Bank, I would have those opened in those business checking accounts, and have those seasoned, where you can also make a deposit into the account, but also open up at least a personal credit card. Even if it's a low limit, start off with a low limit, and then build your way up there over months, over time, get that limit increase if you can. If not, move into another card. It approves you for a high enough of a limit there on your second card. If it's on a personal side, you have a high enough limit, let's say 10 to 15K, 10 to 20K. Then after that, you have it for a little bit, then you go season that, and then you can come back and try to get a business credit card. But that's how I would approach it if I were starting all over. But there's other things depending on each person's credit report. So it's not exactly always going to be that linear. So it just depends, but that's what to look out for. So for credit card stacking on this, if you want to have multiple cards and you want this more of a done for you, you could do it on your own too. If you find that it is more convenient for you, if you have the energy and time, or if you don't want to, if you know how to risk it, and perhaps you won't make any mistakes or very minimal, then you can, if you've done this before. Now, if you want it for convenience, energy, and time, and you want the experts and myself and with the team to help you, then I'm more than happy to go down that direction and look through things, make sure you see there's this versus that, and a little bit more. And I believe a lot of people go down that route because they want that convenience, and they don't want to risk things. Even if they know the qualifications at times, if they still don't understand. And the hard part for a lot of people is understanding how they liquidate the cash out of. And there's a merchant processor, and there are different ways about it and doing this correctly. And if you want a stronger partnership and long-term relationship, especially with somebody who cares, and I do care about you as a person first and foremost. So here, personal credit score on all three bureaus, you want to have 700 and above. Again, it's not to say that you couldn't get in with lower credit, because you could. You might not get an optimized credit profile to get you enough maximum funding or to get more than one card or two, and then you start off with that and then you build your way up. In the meantime, you pay down certain balances, or if you already have less than 700, it's just a matter of paying down balances. I can help you with that as well. So there are different ways to go about this. So 700 on all three consumer credit bureaus is ideal. No more than 4 bank inquiries per bureau in the last 12 months. Others would look at no more than 3. Top tier banks, a lot of the time, no more than 2 to 3, no more than 2 with certain ones. And they'll look at the time frame between that. Within the last 6 to 12 months or so is primarily what they're looking at. And so be careful of that. Other places, no more than 3 hard inquiries within that bureau, or sometimes they'll tell you within per bureau, because if they pull from multiple, like a Capital One would, just be cautious. Those aren't the ones that I would go to first, because they will display on those side, on the personal side. And if you're using it with caution, that's okay, but just understand that. And there's a few more things there. I won't go too deep into that. So no more than 4 bank inquiries per bureau in the last 12 months. Ideally, no more than 3. It does not include secured inquiries like auto loans and mortgages, so that's not a concern there. No more than 3 unsecured accounts open in the past 12 months. This is common across the whole board, whatever accounts those are. And certain ones would not want to see more than 3 unsecured accounts open in the past 6 months. So they are more conservative when it comes to that, and the borrower and their specifications, especially if you don't have a relationship with them. And in case you don't have those relationships, we're able to help you with that as well, leverage our own. And what I always recommend, and I always tell business owners, whether you're doing it online or in person, make sure you have a banking relationship manager, somebody that's in the door that can help you and guide you, and also help you try to get higher approvals because of what the direct connection that they have to get this process and through. So that's very helpful to have. Without that, a lot of the times you see like a $25,000 to $30,000 difference. You may only get approved for $15K to $25K, where with the banking relationship manager and probably a seasoned LLC, 2 years and above or so, more or less, could be still under, you probably get $50K to start with, $50K and above. And it just depends on what your other balances are, if you have any as well. So this also does not include secured inquiries like auto loans and mortgages. But on the unsecured accounts, having too many recent open ones, it just shows you have too much activity. Where have you been applying to? Why have you been applying there? How much already do you have on your report? You're going to be overextended in credit. You might not even make the payments. There could be a lot of trouble coming down the road, perhaps a default, perhaps a bankruptcy. There are other issues in mind. So we just want to be more prepared before that ever happens. And there are many other things that could happen: late payments, charge-offs, and all these other things, derogatories and spur out. Under 40% utilization on each of your revolving accounts. And again, this is to do credit card stacking. Now, if you didn't, other times we'd want to see, and in this case too, under 30% is ideal. Under 40%, even at 50%, it's likely going to decline you, or you're going to be asked to pay down your balance. I'll get into some of that in a minute or soon. But making sure you have anything underneath 40% is ideal, and on each of those revolving accounts. Revolving is being the key word there. So having that utilization lower on your revolving accounts on each one of them. So we're looking at them all in total. We're looking at the accounts. We're looking at the cards. We're looking at the trade lines, all this stuff. And I can calculate from looking at a credit report what each one of those accounts percentage is. And then what I do is I'll better understand per account, per bureau, how much is it in total. And that'll also tell me how much they need to drop or make their payments. The significant difference from 30% or being underneath 10% can be a big $10,000 or $7,000 jump like that. So you might only need to pay down, let's say $3,000, but if you wanted to get underneath 10% utilization on your revolving account and on each and every one of them, then you might have to have a balance paid down of about $7,000 to, let's say, $10,000, more or less. So you got to kind of look at it and go, what is in my best interest? I would recommend getting underneath 10% utilization on your revolving accounts. Why? Because then that will also allow you to have breathing room on your credit score. If your credit score can, from a result of that, be at least a 750 and above, or 751 is usually the metric and above, then the chances of you getting a 50K to start with a disclaimer there, depending on what you have already, are of a greater odd. I've seen that a lot. It's happened to me too, with many people that I've helped, where if you have that 750 plus credit score, that'll be an entry point and one data point that allows you to even get better approvals from these different locations, lower tier and more. No bankruptcies at all showing on your credit file. So when I look at the report and or my team, is there anything that shows public records? That's normally where it's under, or in other places too. But every report looks a little bit different. Just depends on which one. I'll get to some of these details here soon. But none of us want to see any bankruptcy. So if there is one, whether it's recent or not, and it's still showing, we don't want any bankruptcy. That's a huge red flag, whether it's this chapter or that chapter. I'm not going to get into the technicals on that right now, but no bankruptcy, period. Personal or business. Just because you're getting business credit card doesn't mean that you can if you have a personal bankruptcy. That's not how it works. You're still liable. You're the person we're checking up your credit under. If you can't make your payments for whatever those reasons were on whatever those accounts or whatever you went bankrupt on, what makes us think that you will be capable of handling this debt? If you're looking for $20,000, but you can only handle $500 on a starter card, how can you demonstrate to us that you'll handle those payments? Well, I made about $20,000 in payments over the last 11 years. Maybe you never got an increase. Well, that doesn't really align to that. They might only give you maybe a $10,000 to start off with. If you already have a relationship with them, even better. That's what's happened a lot of the time to many people, especially with like a Chase, and that's my primary banking relationship, and I have others too. No open, or in other words, unpaid, it could still be open and unpaid, collections or judgments at all. Like, that's self-explanatory. We don't have to get into, again, the technicalities of judgments in place, defaults with past judgments in place or other things, and any collections at all. We don't want to see that. No open, unpaid. No late payments in 2 years. No charged off accounts. So this is stuff too that I see on the credit report. I see things like that show late payments or they don't. How long ago were they? Are they acceptable? Where were they? And it gives me a better picture of why. There's still more that I would understand from the person of why that happened. But no late payments in 2 years, no charged off accounts. And that's just for the credit card stacking side. That's a big 2 years. So what you'd want to do in case you don't qualify for this, and I'll get into what kind of cards you need to have, you do want to get a credit partner if you can, if it's possible. Make sure you get somebody who, well, for one, let's look at it this way. If you got a credit partner, are they a part owner of the business? What's their percentage? If they have at least 10% ownership of the business, they can use their own credit to apply with. There's no co-signer, co-borrower agreement with this. This is more of a, they are going to apply with their own credit to guarantee the credit lines. It's not a personal loan used for business or these other ways of going and getting a co-borrower or a co-signer in case of this and that. This works a bit differently in that. Maybe over time it changes and you can get into that as you do this, but normally what happens is you want to use the person with the stronger credit to apply with their own individual credit to guarantee the credit lines, to guarantee the personal term / installment loan, personal lines of credit for doing creative credit-based financing with just a combination of them or one or more. So that's how it works. And if they have at least 10% ownership, better 20% and above, but 10%, usually sometimes that may change, but 10%, that's a great indication that they can apply for one entity. It's not going to be one entity and you use both people's score. If you guys have it up and it's where it needs to be, it's not going to be that way. So it's one person for that one entity. Now, if that other person had their own separate entity, yes, they can come in and apply underneath that entity. When it comes to personal loans, that's a little bit different, where each person could apply separately, and that's how you'd want to do it for one entity, because it's not, the personal loans and all that's not tied to that. It's not tied to that exact look on the EIN, articles of organization and all that. Unlike business credit cards are, where they're going to be asking for just like an EIN letter and articles of organization, the certification of state, formation within the states. That's another way of saying it. Secretary of State, operating agreement, everything makes sure that it is there and it is in good standing. There's a lot of the little things that I have too, and what I help people with. And so that's another part of it. Get a credit partner. If they don't own any part of the business, it's still okay. They don't have to be. They can be somebody who just finances the business. They don't have any ownership in it. But if they don't have no business, no percentage, none of that, likely they're only going to be able to get the personal side of funding. Term loans, installment loans, perhaps personal lines of credit, perhaps personal credit cards, but underneath their account. A lot of the times you can see authorized user accounts for not for this exactly, but when you try to develop somebody else's credit profile, you can go down that direction, and that's another place to turn to for when you're doing that with getting somebody else's credit and then being able to boost yours. But for this, no authorized users a lot of the time for this. Seasoned major bank card trade lines of at least a $5,000 plus limit. You must have a minimum of 2 open revolving accounts within at least 2 years or history or more. You can have 1 open revolving account if there's an aged mortgage with at least 2 years of history, or 1 open revolving account with aged entity over 2 years. So I'll say that again, just so you have it here. A seasoned major bank card trade lines of at least a 5,000 plus limit must have a minimum of 2, though, open revolving accounts with at least 2 years of history or more. History matters significantly. If you have something just recently opened, it doesn't demonstrate to us that you have enough age, average age of account or accounts. And if you start closing accounts, you have to be cautious of the total average. And another problem too that I see when we're then talking about something different like student loans, which you need to be cautious of, is paying it off too early, because that's going to contribute to your overall average age. And if that drops significantly, that can be somewhat, I don't want to say the word damaging, but it can alter the course of how much you would get in approvals and for other types of funding and other things, and what your average age is. So must have a minimum of 2 open revolving accounts with at least 2 years of history or more. You can have 1 open revolving account if there is an age mortgage with at least 2 years of history or more. So 1 open revolving account with at least 2 years of an age mortgage history or more. Or again, 1 open revolving account with an aged entity over 2 years. So instead of the aged mortgage, it's the aged entity. So a 2-year plus LLC plus preferred S Corp, C Corp, etc. So that would be the ideal situation. Now I have a little bit more here that I want to have. I have it in another document just to make sure I didn't miss this. Just some additional components. Oh, one thing I do want to mention before I get into some of that. So this would require a personal guarantee from you or a credit partner, as I spoke about earlier, some of the situations there, and there's a little bit more to look at. And then over time, over that entity, if you needed to get more, we can use a credit partner, but then an EIN would be required if you use one, so for a credit partner. No authorized user accounts for qualification, and that's what I mentioned more or less earlier. And we'll go to this in a second. Here's what I do want to mention. If your scores are less than 700, only this, and it's due to high balances on your revolving accounts or account, you may still qualify. Again, if your scores are less than 700 only, due to high balances on revolving accounts, you may still qualify. Now, where does it become, like, where can I go? What can I do? What do I look at? So I didn't get into the personal term / installment loan. I think I'll give you a little bit of that. I won't go too much into that. But similarly, you want to look at a few things. But the credit bureaus, normally you want a 680 on all 3 consumer credit bureaus. You can have 680, 700 plus Experian. It could be non-banking, banking, non-banking, private lenders. I have those connections on a personal and business level. So it just depends on where you go. And somewhat similar, we don't want to see any late payments in 1 year as opposed to 2 on the business credit side, and then no charged off accounts. So I won't go too much into that, but the seasoned major bank card trade line of at least a $3,000 plus limit is what is being looked at. And one thing I do want to emphasize on this other document that I have, that I put together, and I've shared with people, or I've more or less gone through, sometimes shared, but at times too, you'll also see, for the most part actually, at least 2 open credit cards with 2 years of history and at least a $5,000 plus limit, and it must be a primary card. So I didn't want to mention that in another way of saying it on the major bank card trade lines of about 5,000 plus, and at least 2 open credit cards there with 2+ years of history and at least a 5,000 plus limit and it must be a primary card. So I look at things here, I put this on a document, and this is what I put together after reviewing a lot of credit. I would do many of them before I started doing other things, but as things have grown, I've had to take a little bit of time to go through everybody's credit report every single day. I have a team that can handle that now, but there's a team that I'm with that can handle that part and or however it's asked, however it's reviewed on the back end, all this. So whatever we're able to do there. But I reviewed so many of them. I wouldn't say 5, probably say like 10 plus. Then it lowered to about 5 to 7 and then got to about 5. And then I removed that down to about 3 to 5. And then nowadays it's more in that range. It can be 1 to 3 because of how I have things set up and I need to have my focus in other places, other parts of funding too. But I know how to handle a lot of that. So I just put together a document here. I'm not going to go through every little part of it, but this is just where I go into to optimize what I need to look at. And just some of the things that I'll go through is on that report. It depends on where we're looking at. Is it identity IQ? Because they may show Vantage scores. You can also get your FICO scores, FICO 8s. And then also my free credit report, annual credit report, go to Experian. There are different ways of actually accessing that credit report. And then there's ways of me asking how I can send it over or how I would need to have this shown. But lowering utilization is a huge component that I look at. I can see it on the reports as I scroll through, as I look at things. I can see how much of the balances you have in total of everything. I can see how much per card. I can see how much your primary trade lines is this and that. And I can see a variety of different formats. So I know exactly where my eyeballs need to be when I look at things. And this is silent work for me. As I look at bank statements and everything, this is silent. This is me pre-underwriting, underwriting work. And I'm very effective at that. I've always thought about just becoming a full-time underwriter. But because of the flexibility, versatility I have on this as the broker, the opportunity cost of having what I have, and then the freedom to be that, because then couldn't be really on call. I'd have to be doing that underneath the in-house or in-house look this way, 9 to 5 kind of thing. Not that that's bad, but you look at the opportunity cost of that. You take the good with the bad and that. So lower utilization, removing derogatory marks on excessive inquiries, that is huge. So when I look at a part of the credit report and other parts as well as I scroll down, I'll then be able to see and assess, okay, this is going to need credit repair. Which, by the way, if you guys do need help with credit repair at a very low cost, but it's very effective, Metro 2 disputing processes and more, and it's very effective longer term, things that can be done, removed much quicker than other ways, then that's something I'll leave for you down below in the description, in the comments, or in the bio link. There's going to be a credit repair link or a button you can click on, but I will leave it down below in the description. You will go through a video, watch it, that I made a review on, and then in the description of that, you can click the link. The first one it should be. It'll take you to my page that I created. Fill out some simple credit repair funding details, or credit repair. I used to saying funding. Credit repair details. And at the bottom, describe your needs. Describe why you're seeking credit repair. I want you to be specific. I just want to move to a 300 to a 600. I'll get to you guys in a second. But I need to know, why is it before I've looked at the credit. And it may ask for your SSN number, but that is very protective. It's safe and secure. It's just to verify, see the credit. And you don't have to actually input that field into that. You could go through it without it. You can still go through things. But a lot of this is in my back office, things I've been able to help people with. And I outsource that part now. I used to do a bit of that myself, but because, again, I have other parts of the business that I have to heavily put my focus on, I can't always be doing everything, the repair. I can't always be doing the soft pulls. I can't always be looking at it this way. Sometimes I don't have to look at all the bank statements on the front end, but on the back end. So I want you guys to understand that I have your guys' best vested interest as the person first and foremost. Honestly, I care about your mentality. I care about your mental well-being because I've worked hard on myself. I'm not your traditional broker, guys. And just want you guys to know that I go farther than, I want to say, not maybe, well, the majority, you could say, if not all. I don't want to be that person to say that, but I'm not perfect either. I just want to make sure you get the very best when we're going through this process. What else I'm going to look at here, this is another key part, is after the soft pull, I'm going to understand what kind of cards or what kind of accounts do you have. And do those accounts warrant you being able to get a soft pull limit increase first and foremost before any kind of hard pull limit increase? And you can check in too. And that's where I would work and focus on to see if we can do any kind of an increase or an increases on accounts, and then offer it up to beef it up on your credit report. That way, when you try to go get business credit, if you are not ready for business credit, this is another thing too, is we focus also on increasing organic accounts and beefing or juicing that up so it looks good. So when you are business credit ready, you can walk into that and get a better projected range than you would have before. So a lot of the time you do need to start on your personal side, whether it's through repair or in other ways, but that's another thing I look at. So I'm also going to see what kind of cards, what kind of credit cards, are they store cards, charge cards on this? Are they with any major bank relationships? If they are not, then I'm going to recommend something like authorized user trade lines, and perhaps doing, like I said earlier, a round of personal funding depending on what you have and don't have, instead to get you more funding in the business side with business credit cards and other forms in the future. And when you start building your business credit profile, that's going to help you with your DMB, all these other things, when vendor accounts, things that are reporting accurately, you're making your payments. It'll be very helpful for a majority. Another thing too that I went into here is that part. I already went into the credit reports, from where you could potentially get them from and what we're looking for. One thing too to look at and focus on, like this is this topic, but from like a bank term loan and these other formats, SBAs and things like that, other lending, business funding, loan, advance opportunities, you'll see that they're going to want, especially at a bank level, FICO 2 scores to look at. And for the majority of all three consumer credit bureaus, if not one only, but they will require, if it's one, usually they'll require the business liquid credit score, to be at least 155 and above. Not the paydex score, but a business liquid credit score, and how well you're handling your payments and what kind of payments, and a lot of other things that go on with this. I've spoken about it in the past, but here, that's what they're going to want. Sometimes they're going to replace that liquid credit score with the paydex score on those bank loans. And then other times they won't have any business credit requirement. Depends on the bank, but it's on a case-by-case basis. And for the most part, they will want to see some kind of business credit establishment. If it's not strong enough, that doesn't mean because you don't have a 70 or an 80 paydex score, doesn't mean they're going to decline you. If you're just underneath 155, depending on if you're within a 5 to 10 range, they could still approve of, with a disclaimer there. Guys, I'm in this market. I'm an expert at what I do. If you're just joining or if you're just skipping to this part, I'm more reserved. I'm very analytical. A lot of people will turn to me, like I've said, because I'm a very loyal. I don't spew. I'm not a salesperson. I don't even like the use the word sales. I went to school. And even if it's in the right context of sales, but I went to school. I educated myself. I studied sociology a bit, played Division I soccer for a little. And then I went into chemical engineering and did that for a bit. Took classes there. Chemistry is my favorite class. And then I went into business because I needed to make a big change. I honestly wanted to start a business, so I thought this would pay off. It was hard, but I did get into that. Like, it was hard to make that change, the transition. And so I went through that. I've worked in construction, manufacturing, and in the field positions, not in just like a cubicle space, data, looking at numbers and doing math and a lot of that. I do a bit of that now in what I do here, but I was in the field position working machines, warehousing. I was a ramp agent in my younger 20s. Been in other roles. I was in financial logistics, one of my later roles, and doing a lot of data, moving media boxes for a huge contracting company servicing HP and Peace Health. Company went down under. I had to go back on unemployment benefits, food stamp cards. Worst feeling. What was worse than that was that I was searching for work, and I could have taken another job or career even before the company went down under, but for stability and that was the period before the company went down under. I was starting to prepare for a business there. And so I was able to give that time when I was relieved of that, or when we were let go, 50 plus people, transition, all these things, budget costs, of course. And so even high positions, I was underpaid, undervalued. I couldn't move up another position, and I was waiting for that, but the person in front of me wouldn't retire. So I stayed there for more stability and for other things. Huge contracting company servicing HP and Peace Health. Still having to move media boxes. I'm not genetically built or gifted, but I had to move things, pallet jack. I was on the forklift, having to move things off top shelves, on the computer, wasn't picking up fast. It was slow, but then there was days where it would pick up, and I questioned it, but it was there for. I saw the vision of where I can move into. People wanted me to move here and do this and that, and then it was just unfortunate at the time the company was going down under, and at the time, yeah, I'm looking for work again, and getting the what was it, the IRS, getting in the mailbox that I hadn't been searching and that I owed them this amount that they were giving me in unemployment. I was like a life or death situation. That was a very like low point because they had messed up on their side, and I felt very very low. Like I felt like I was done. Like what do I owe? I've been doing this right, and so it was like everything stopped for me, and I went pale. Basically, could have fainted. That it was that bad. I thought about it and I said, couldn't be this, but when you hear something from them or you hear something from the government, it's like, and you know it's that important, serious, like I didn't do anything wrong. And so I had to dispute that and I got it corrected and it was on their fault, on their side. But things were cleared up. But just going to the grocery store and paying with my EBT card, again, it was just not a good feeling. And not even being able to lock eyes, just being happy that I can walk out with food and going out for a meal was hard for me, even paying 50% of it, even if I could. I just didn't feel like I was in better position to. And I just felt like a burden, even though my family wouldn't tell you that. It felt that way for me. And I didn't want to continue to let people down. And I know I needed to make a change. And it was during that time that I started building my business. And then I built that for years. And then I started venturing off into a few others as those grew. Now, over here, I'm going to get into this part. We're going to close up here probably in the next 5 or so minutes. I greatly appreciate you. Thank you for your energy and time. Sincerely, I do. It's hard for me to be on video. I'm more of a writer. So I'm looking at things into the report. I'm looking at your credit scores. I'm looking at your rank from the lender's point of view, your scoring scale, your risk factors. There's other little things in the summary that I'm looking at or other things in the credit scores report. I go to the summary accounts. I'll do a few things there. I'll look through the things. I'll look to see if you have any delinquencies. What do you have open? What do you have closed? Do you have more accounts open than you have closed? That's still a healthy sign. If over 50% or at least 50% of your accounts are closed, no, not a good sign at all. And now how recent that is, and when I look through everything, no. Paid off, non-paid off, like that can even be more troubling. So you have to be cautious of that. And another thing too, this goes without being said, but it builds your average age of credit. And then it shows your banks or other banks that you can handle more credit when they look at your credit and they try to do a comparable credit score to try to give you as much 3 to 5 times on the business than what you have on the personal or equal to on that. So delinquencies, I'm looking at that. I need to see that there are zeros across all boards, not just Experian 0, Equifax 1 or 2, and then TransUnion 0. I need to see it across all boards. Now you can discuss with me and tell me what do I need to do to help this, accelerate this, get this removed. And then also if you're trying to rebuild your credit, personal and or business, I can help you with that. It's not as complicated. It's somewhat of a different process. How do we beef up your account or accounts? And those are going to probably take a little bit more time than the 30, 60, 90-day time frame. You might have to build that up over a year before you can transition. Not always, though. Derogatories, same thing, 0. Collections, public records, and 0 again there. And there's a few other things I look at, 0 across the boards. Balances, I'm going to look at all of that. I'm going to better determine where those are coming from when I look through the full report. I can understand how much is this due to credit, due to installment, revolving, whatever it is, auto loans, or I'm going to look at a few more things to determine that, but primarily from the revolving credit point of view for doing credit cards. Payments, I'm looking at how much of the payments you have or you've been making, and this is where I'm going to better determine your debt to income. And so for an example, let's just keep this as round numbers. You're doing $10,000 per month, and I put here, I have other examples too. Actually, I have a few things that I did for a few clients. And so if you're doing $10,000 per month and you have about a $600 payment, that's simple math. You have about a 6% DTI. So that's relatively low when you consider that percentage. And when it comes to any kind of like personal loans, term loans, having anything underneath 30, 35% is best. Anything underneath 10% and then on each of your revolving accounts even more, stronger. That's what's going to allow you to start getting higher approvals for business credit cards and more. So those are just some round numbers, and it can show payments under which ones. Usually on the top summary, I can see it across all boards or more or less. And this is something that not a lot of people know about. Like, how do we make that determination on the 10K? Well, you think about, so the 10K is really coming from what's your average or your monthly revenue precisely per month. So we talk about it on an adjusted gross income yearly or annual gross income scale. What does it look like when we reverse engineer that? What does it look like on a per month basis? What are you making per month on income? So that versus your payments, DTI, and there's a few other things too. That's very self-explanatory though. I'm sure if you're watching this here, you would probably know that. There's a few other things that we calculate though. So these are just a few key pointers, making sure that every single card, I would say underneath 30%, usually it's underneath 30%. If you have 40%, okay, but the limits are going to change. And I've seen that be a difference of like 10 to 15K. So it isn't just lightly marginal. It can make a big difference. Sometimes, other times it's like 5 to 10K more or less, but just depends on the relationship, depends on the location, the place, all this. So what I would recommend, if your utilization isn't down, you pay it down or consolidate it into a personal loan that will then hide your utilization and will bump your credit up. So if you're just above 700 or wherever you are, the difference can be like 50 points or less. So if you're close enough to that 750 score, even better, because then you will probably be pushed past that or just there or just above it. And when you get to a 750 plus, 751 plus is best. That's where you then start getting into those ranges. And then that's where then if we optimize for each credit bureau, then now you're going to start getting into those like 6-figure approvals, 100 to 125K plus. That's where it really ends up happening. There's more, 150, 250, going on. So like I said earlier, anything over 45, 50% could get you declined depending on how over leveraged you are. And it can result also in a much, much lower limit, like a significant 40 to 50%. I can't always say it's going to be 5 to 10K or 10 to 15K. It just depends on a few key factors of that underwriting, depends on the location, depends on the relationship, depends on a few more things, depends on your other overall credit. So what I would do is, if you can, use a bridge loan. So if your business is already generating revenue, if you find other ways that you can consolidate this, do it, consolidate, refinance, other scenarios out there, especially for loan situations, advances. But you look at taking a bridge loan, a short-term bridge that I've helped out many people do, where they might be taking out like $15,000 to pay off their total accounts. Maybe they need to have a pay down balance to about $5,000 total, so we get them $15,000. So 15 minus 10K is $5K. Just depends on the numbers. This is just a quick example. You might get 20K. You need to pay down till, let's say, roughly 2,500. So we're gonna do 20K, pay down about 18.5 or 17.5. So you look at those numbers, and that's how we better determine on what's the possibility. And I always recommend, again, underneath 10%. So it just depends on what goals you have, how much you want. We need to meet that 10% under. How do we get that 10% and under? Here's our strategy. If it's just 30% or 10%, 20, 30% here, average, okay, but what is it on each of the revolving accounts? That's what we're going to be looking at. So personal loans, I help people without. That's another combination in creative credit base. So you'll see often where you get personal plus business credit, or personal plus, just personal, or there's business credit only. So there's combinations or there's singular. And sometimes you have an option of the two, one or the other, or only one, only personal or only business credit, because of your credit reports, because of your history, age history, utilization, accounts, payments, all this other structure that makes up your credit. I'm not going to get into all that. I have a video that's on that. I'll try to link it to you guys down below. If not, it's okay though. So here, ideal credit utilization, like I said, normally underneath 10%. That's where you will get normally the most. Those of you who are in the 800 club like us, we know, and us I mean by you and I and all of us here who are in that, we know that what it takes to really get to that can take a lot of hard work. Sometimes it isn't as hard. It's more smart work. Of course, you do the two together. But having very much aged accounts, having many multiple accounts can really help you get there. And there's other ways and other things to do to beef up your credit profile and so forth. So underneath 10% normally does. Then I'm going to look at, if I haven't already, which glances my eyes over, is inquiries, if I haven't already. And I usually do a skim through. I look through things. I look through things back from the end to the back. I look through a few things because I need to look there first, depending on the situation. So you may have to remove your credit inquiries. And again, if I didn't say, this is more so between the last 6 to 12 months is what we're looking for. That's ideally the time frame. And these are especially from denials. So if they are from personal approvals, keep in mind that this can result in bad credit accounts for that account to then get denied. So if we're looking at things that have been declined, can we look at removing those inquiries? Okay. What are other things that you need? Does that form take a credit repair situation? Does it take calling in and removing something? That's another situation. So after, if I haven't already, and this is what I'm doing in the whole process, I'm looking at your accounts. I'm looking underneath every single one. So you might have a Chase Bank, a US Bank, Bank of America, Discover, Wells Fargo. I can go on and on and on. I've seen so many of these. But example, let's say Chase Bank. I'm going to look to see how much you've had the card for. And I'm going to look to see what date range. I'm going to look to see another few specific things. I'm going to see if it's been opened or closed. If it's closed, it can only hurt your total. We can't do anything at that point. I mean, we got to look at what's open. Well, there's differences there, but we got to see what's open and focus on a lot of that. So what I would do then is try to get a personal card if you don't have already an established relationship with them. If you do, go open up a personal card with them. And that's where I would begin. Chase Reserve, Freedom, a whole combination of at least 10K is recommended. If you can have it on one card, that's even better. That would probably be the best way to do it, is to have at least each separate card of at least 10K and above. But if you have total, that's one other thing that helps. But at least each separate card, I would say at least 10 to 15K on each. And that only goes through experience and age and things like that. So looking to see if it is open or closed. And usually what I see closed is I go down the list, and it depends on the type of credit, again, that's been issued. It depends on personal and business, depends on auto loans, mortgages. Like you can see closed, or there's a few other things that they are listed as. I'm not going to go through all of that right now, but I've spoken about it in the past. Intermediate, all these other things. So with somebody like Chase, their ink cards, get a couple of them, and for 12 months, very, very helpful. At 0% interest is what I would be then focusing on. And they normally will pull from Experian for the most part. It's happened with me. Happens for a majority of people, maybe geographical location area targeted. So that's normally the case. If you're looking at places like a US bank in those, and I'll give you that example here, they may pull from Experian or Equifax for their 0% interest card for 18, sometimes 20, even more than that I've seen. US Bank, they are more conservative. That's something that I mentioned earlier. So when people ask me, why didn't I get as much? Why didn't I get at least 50K? But I have a high personal limit. So why is it not giving me comparable credit equal to what I can get on the business credit side? For one, there is credit mix. There is age of history. There is relationship with that. They are more conservative. There are inquiries involved. There are other things that are greater than that. So we have to look at overall total history, overall usage. If you're not using your other cards as much, or if not enough of a high enough limit, then it's like, why would we issue you a $50,000 card if you can only handle $2,500? Like, you may just have to start off with $10,000 at that next card level. If your credit limit increase is not going to give you above $1,000, or in many cases, which ends up happening. Other places can try to triple the amount, but not always do you see that. From another personal credit limit increase to another 3x, what I meant. So yeah, I just spoke about this, and this is what I mentioned earlier. So if you're not having a bulk enough credit profile, like you're not going to get to a 50K simply with US Bank because you just opened up an account. If everything else shows us what kind of credit age, what kind of history underneath those credit bureaus, and they're more conservative, and you don't have a personal card or anything in the door, you may only get an approval between 10 to 15 or 10 to 20K. That's what I've seen a lot. And then another key point here is when you do start leveraging that, you start aging your LLC or so, then you want to work with the bank relationship manager. You want to work with somebody in the door that can really help you and then maximize those 30K to 50K plus approvals. And that's how they come through a lot of these times. And not only through several cards, but now you have it on a single card. So if you have other locations where you have a couple of like Chase cards in total, 25 each, 50K there. Now you're looking for more cards out there or more others through Chase. Now we have to look and see what you currently have and then work that way. A few things I'm going to look at, and I've already looked at this point for the majority. I'm going to look at your credit limit section, and then I'm going to look at your balances. And then it'll show me how much utilization you have on each card. I'm going to do a few calculations to see how much you need to bring it down, a few things, the other stipulations, closed, open. Is it too high? And you have to pay it down fast enough, because if you don't, you might not get enough of an approval, or this banking relationship or this card won't issue you this until you do this specific thing you need to do. Do we do a personal loan, a debt consolidation loan? That's what they are called a lot of the times. And even with personal loans, people use that for paying down like advances or other types of funding too. So they are very useful. They can spread your terms out over 1 to 5 years, more or less, maybe 7 years. But they normally can do that between up to maybe 10 or 20K up to about 500,000, even more, 350,000 with the first round. So just keep that in mind. It just depends on how much you really need. So if you needed this to pay down the balances, but then think about, are you trying to save money on a mortgage? Are you trying to transfer something over to another account? Will you be using this for a little bit of funding your business's marketing, or how are you going about it? That's what you need to think about, and how it's going to be used. Is it a down payment, inventory purchases, contracts you need to secure? A lot goes on and on. But when you start securing contracts in a higher level, you start going for like larger amounts. What I would recommend, if they offer it, call in and see if they can do a soft pull limit increase. That's where I would begin. And I went into the comparable credit, which means they'll approve you for the similar limit to the highest limit on your personal credit report or your personal credit card report there in general. So I covered that a little bit. So I went through some examples. I'm not going to cover all these other ones. I just gave you one, but that's how I would look at this from each. I would see the types of limits. I would see what is available, what isn't. What are those cards? Where are they coming from? I would already have known your location, as in the state that you're in, so that can better prepare me to understand. There's just a few more things here. I won't cover all of this. Just a few other things to be cautious of, like I mentioned here in helping somebody too recently on a Capital One that they were trying to go for, that they do a triple hard pull. And though they do a credit line increase every 6 months, like you see with other places too. Student loans, I spoke about that a little bit. Auto loans, I kind of have that. Mortgages, other things too as well. Closed accounts, I already covered that. Not concerned unless negative, charge off, repo collection, closure late payments, all these other things. They can't help you. Like I said, they can only help you move forward. Or they can't help you. They can only hurt you, excuse me. So you got to focus on what I said earlier, which was the open accounts. And what not to close. It's also cautious. So I would recommend overall total results in this scenario. If you don't have any, if you have pay down, you have the option to, depending on how fast you can make those payments yourself, or if we needed to get a bridge loan to do that or some other way, then I would advise you to pay off the total credit card debt. That way we can get your credit to a high 750 as much as we can, get it close enough, if not there, and then try to do the highest approval amounts. Other things, inquiries, creditor name, date of inquiry, credit bureau section, type of business, a few other things that I'm going to look at. There's a few bullet points I put there, but I'm not going to go through this really in depth. There's just some things for me and what I've been doing and a lot of, but those are just the sections that I look at in different date ranges to see when those inquiries were there and if they've aged, etc. So I have certain results that I will go after depending on each person's credit profile. Each person is different. So I might start off with a personal loan, or we go directly into business credit cards. And then these would be the cards that we would go after depending on your state, depending on your location, depending on the LLC, age, a few other situations. So I'm going to map out all of this on a specific location, like bank branch locator. It's very commonly used by many. The majority of it is used. So I'll go through that per state and I'll see what banks and what relationships we could establish and form or form more of, and see if they can offer other products. If you got an auto loan, would they offer you this, or a mortgage for this and that? What else products can we go after? And you've already have an established relationship. That's where I would always begin when I tell people is work with your established relationships. And if we needed to add more, we can add more and help you, and then also add more on the business credit side when you're ready, if not already. Just a few things here. There are no doc business lines of credit. Now, many of them will want to see an aged LLC, or you could say corporation, for at least 2 years and above. Anything underneath 2 years, it's going to be hard to accept. Sometimes it is available, but not usually. But you'll see at least a seasoned LLC. That's what they want for no doc business lines of credit up to 50K. Anything over 50K, you will usually need to add documentation to that and proof of revenue, tax returns, P&L differences there, depending on the location, depending on the bank, etc. But that's what they're going to look at. So anything up to 50K. I would start off with business lines of credit, no doc, because they can generally approve for more than credit cards, but not always in every case. It just depends on your credit profile. It depends on how many inquiries you already have and don't have. So you might get more from the business credit side, where you could have got about 50K to begin with, and maybe they matched it on the same with the line of credit if we did it all at once, or we come later to do a line of credit, or you were asked to get it if you wanted a line of credit with one pull. And so that's another instance. Maybe you got more and then you got a line of credit for like 10K, 15K, but you got a credit card for 35 to 50K. So it's always better to start off with that. But in many cases, it's better to go after the business credit cards because of what you already have in your bulk profile and then what you're trying to accomplish in terms of how you need to use the funds. That makes a lot more sense. So we have to focus on that and having those cards already established, and you're going to have it in the door with multiple so that you can already get going faster with those. So if it's anything underneath 2 years, sometimes no docs are there, but for the majority of this, I would focus on just the 0% interest business credit cards and a combination of other creative credit-based financing if we can. And there are also, as I mentioned here, there are no doc, low doc, high doc lines of credit. I won't get into each one of them. I have a lot of line of credit videos. I'll try to link you to down below. But I go into no doc, low doc, high doc, and that you really don't need anything here. Low doc, about 3 months of bank statements, 6 months if they needed to track it that way back. Pretty much it. Copy of your driver's license, avoided check, etc. And then high doc, anything over like 50K even then at banks, major banks, depends on where you go to. Over 100,000 too. They're going to be asking for more returns and little things like that. And that's another thing too that I mentioned here, why a lot of people start off with like their business lines of credit, because they can range, like I said, even above 50K. But when you're doing no doc, you got to look at that too and think about where you are, how old is your business, your entity, depending on how much revenue you generate. That could be helpful. So there are those instances, and it can be funding within like 1 to 2 or so approvals, 1 to 2, 1 to 3 approvals. And so that's pretty much it there. And I think I covered that. One thing I do want to mention is when I do go after 0% interest credit cards, there could be like 2 to 4, 2 to 5 per bureau. 2 to 4 more so is the range. So I'm going to look at Experian, Equifax, TransUnion, and better determine which ones are best to go after and put those applications together and go after strategically all at once. And so covered this part. Okay. And I believe I've covered everything. I covered this document very well. This is a good bank too. And I've helped them as well, like a Cadence Bank with like a bank type of loans in situations like that. And right here, but that's a good one to go for. for those SBA loans. And I have a lot of different SBA lenders, preferred lenders. So in case you were wondering for your situation, whatever you're trying to open up, like a brewery, microbrewery, a restaurant, e-commerce business, starting or purchasing, I know exactly like which lender would look at it fine, the other ones wouldn't, or you'd be in competition with these two or three, but this one would try to win over your business because they have better maximum approvals and they specialize more or their underwriting, and it's a combination of them too. So I will go to the comments here. We are streaming on live in case I didn't say this. It's spontaneous, so it's not like I expected people to be in here. But this will be up on YouTube hopefully soon. Hopefully I put it up there. Let me scroll up here. Good question. At a 300 credit score, I mean you're at the low of the lowest right there, basically. It becomes hard to lend to any capacity, even if credit at like a cash flow revenue, income backed opportunity is there if you have the revenue, because they want to see at least a 450, but a lot, if it's a lower revenue range, like less than 10,000, many of them will want at least a 500 plus credit score. Other providers that I have will want at least a 550, a 600 and above for your specific industry. It still makes it hard, even though credit isn't the sole requirement. And if you have that low of credit, and if we're doing collateral backed, now how much revenue does your business generate? That'd be another question. And then the other thing too to think about is, do you have any commercial real estate or investment real estate that you own? Is it free and clear? If that's the case, then we can work behind that. The only difference is it would be a cash out refinance. So if you're looking at current mortgage rates and what you would bring it up to the current interest rate it is today, does that benefit you? Is the opportunity cost, the cost of foregoing, the economies of scale, the micro, macro economic viewpoint of this as we move forward, is it benefiting you? And is it benefiting what you took out of that to help your business? Because is your business going to make up for this ROI? Is it going to stabilize? Because not everything that you use debt for in your business is going to be appreciating. Not everything is an appreciating asset in your business. And if it does appreciate, it probably appreciates for a short time, or it could be something bigger that does appreciate over time that you put money into. But normally, a lot of the times, you'll see a stabilizing factor where over a season, over a couple of months, you might have planned 3, 6, 9, 12 months to have your ROI in 3 months here, and then increase by an additional 25%, your margins, your yield, these factors. But yeah, that's where I would work on credit repair. But I can't say exactly that until I know what it is that is the problem, or multiple, or just the majority. Well, I have this. Oh, I was looking at the bottom of my left screen. It looked like there was a, right here, it looked like there was like a little white piece of paper, but it was it's because I'm doing this and you can see right behind me. I don't know. It's kind of weird. Good question. Let me say this for everybody in here. I don't always announce, but I want you guys to know where I'm currently at and just to hear it as a different point of view and really let that sink in. How do I get a hold of you? I do commercial development and I don't know how to get a hold of you. Nice. In commercial development, how's that been going? Have you been in it for some time? Are you in seek of new property, something currently you need to finish within your property? Is it an extension to something else? But how do you get a hold of me? If the bio doesn't display the link, if we're here on TikTok, it doesn't, I don't know, sometimes it just disguises it for some reason. I don't know whether it shows it or not. I'm not the only one that has done this too. I'm not always on here posting content, otherwise going live because of that and for other reasons that It's the sensitivity of the content for my type of topic. But bio link click, second or third button, depending on your needs. So if this is a business funding need, more working capital, or for other reasons, then you'd use the second button. If it is for a property purchase or a refinance, then use the third one. I do plenty of this with commercial development, residential, whether it's SBA or not, whether it's a real estate private investor, hard money projects for fix and flips, foreign nationals, rentals, 2 to 9 unit apartment complexes, multifamily, you can put that, duplex, list goes on, and condos and more. Kind of just see transition from them, hotel, that. But yeah, each one of them has their separate criteria. I won't be going into that in this video. I wanted to stay on topic with the credit cards only for this, but I have it all in mind. Like when things change, I have it. A lot of this I don't need to reference, but I use it as guidance. So that'd be what I do. Let me put my email in the comments. Hopefully you can see this. So you can send me an email too, but that's where I would begin, or go to viralfundingsolutions.com. And once there, you can go through the navigation. Don't start the consultation part. That's normally a Facebook consult to begin with, and I do a chat because I need to vet people. I need to be energy and time effective. If I were answering calls with people, that wouldn't be efficient for me. And I'm an entrepreneur, guys, business owner, entrepreneur. So I have very structured processes, systems, and when automation and the right automation makes sense, it's there. So I do it very structurally and orderly, and a lot of people love and come to appreciate that. And depending on your needs, a lot of the times I'll show people a PDF with information that's not even publicly released, and I'll show you your best funding option and option. So it just depends on the specifics of the service and the program, real estate property purchases, refinance, or other scenarios. Does anybody else have any questions? Oh, I think there's one here. That is one I will avoid. I'm not sure if you're coming from a place of hostility, a place of attack. You used all caps locks. So I gave you already enough attention. But you can address me how your intentions were behind that. Or what your intentions were. I'll do about 1 more minute. One thing I do want to address while that's going is, guys, I'm not a fool when it comes to, I'm an introvert, right? So it's already hard enough for me to open up and be with quote unquote people. But a lot of people have been following me know how hard it is. And I've opened up in many ways, not only in this one, but in other ones, much more of. And I believe that you should have a broker and underwriter, which is what I do too, to understand not only what lenders or what the requirements, who's the better underwriters for this file, or who's looking at it this way, but somebody who's in your corner. Think about it like a Rocky Balboa, where you're going into the ring. I'm over here just preparing you for it. We're in practice, doing the punching bag, speed bag. We're in the ring, telling you to watch your left, your right. And then when it comes to getting into the ring with your opponent, I'm there for you. They're giving you the water. They're giving you constructive criticism, feedback. Get in, do this, keep it up. I don't have to tell you much. Towel across your head, put you back in there. And you walk out of it victorious. And even if you didn't, you learned something and you improved on something, or more than one. And then we go back into practice mode and we do it. And then the next time we come out, we do it. Do we get the same result or not? Next time we do get the better result. And we win. We go back, do it again. Now we do it over and over. It's just about the same behavior, keeping the same identity, or changing that if you needed to, keeping the same aspirations, or removing or adding to the beliefs. And so I believe in value as a person first. So that's why I value loyalty highly, integrity, trustworthiness. and a lot more. Those are just some of them. And with me, you won't have to worry about that. I've been through the ringer myself getting funding, and I know exactly how that is. I've had to communicate with people who unfortunately go bankrupt on multiple times, and they really know that I am as a person. Like, take away from what's happened in the business, and it's me at my core. I don't say much, but it is me, and you know it's me. I never pressure anybody. I'm never going to push you or steer you in a way that doesn't make any sense for you. Now, others, I can't say the same. Others who are brokers out there, ooh, there's these forums. I'm not going to get into that, but forums, and you hear these conversations and you go, people get over leveraged in millions upon millions, thousands, just because the broker wanted to make money and put money on their table to feed their family. I get that. Okay, I get it. But at the cost of what? At the cost of a business owner going bankrupt? At the cost of a real estate investor finding a better property because you wanted to move on it and close on it? At what costs? You know, you're costing yourself in terms of your character, your traits, your character, what you value, what you aspire to, and be more of your beliefs. And so those are things that I don't let get affected. I've refined them. I've worked on them. I've worked on personal development. So I'm in a better position up here, strong, here, even stronger. So that's what matters to me. Let's do about 15 more seconds. Excuse me. And if I did miss anybody, I do apologize. Trying to go through. Yeah, so here's the last thing I think. I said 15 seconds, but I said this in another video I already uploaded. You guys go check that out. The number one mistake business owners make. And that'll tell you about value and what you value. It'll really open your own eyes to, dang, I've been probably doing this all wrong, and likely you have been. And this is where, like, I brought up some examples too, and people who, like, they communicate with you, they bombard you, they email you. You don't even have any kind of relationship, or you do, or you think you do. You probably got funding from them before, but do you really know who the owner of the business is? Do you really know who the CEO, CFOs are, or CFO? Do you really understand all that? Like, do you know who they are? I'm not asking you how they are as a business person. I'm asking you who they are as a person. Do you really know that? Not a lot of you can answer that with a yes. Do you know who the CEO of Walmart, Amazon, do you know who they are? Like, who? What makes up their values? What's their why? What drives them? What do they value greatly? What drives their priorities, which are their values? What drives them deep down? You guys gotta understand that. And so I'd rather have somebody that I know will be in my corner with those right values than to have somebody just calling me over and over with a 30-person company, maybe Fortune 500 or 5,000 company. So be it. It doesn't make them any better than those who are not. You just have to figure that out. And a lot of these people probably have like 30 people they're calling you. They probably have you on a call list or a do not call list or a do not email, however, whatever it is. Yet they're doing all of this. But do you really know who that person is? Ask yourself. And I've brought that example up. I had people recently who were calling them like 10 different sources. Of all of those, how many of them do you know a thing about personally? Not to my surprise, none. Now, I get it. Why you wouldn't. Just trying to get money. Why does it matter? It matters severely. It matters a lot. I'd rather help out somebody in their small business than a larger corporation. Why? Because of that. Because of why? Because of their values. Because I know they can deliver. We've covered that they are what they are as an expert, but who are they as a person? That's what I want to do. That's what I want to help. When I go into communities, when I go into hospitals, when I do that, when I give back, I want to know who they are. I don't want to just give blindly. I want to know who the kids are. I want to know who the adults are. I want to know Like, I don't have to know everything, but just give me a little bit. Like, what have you been through? Like, what is it that made you be so loyal? What is it that made you be so trustworthy in this situation? It's not just loyal in general, but being loyal to each aspect. When you turn off here from your business, what made you be that loyal? Not a lot of you can answer that. Perhaps you do or don't have it, or you don't look at it in somebody else. And that's what matters to me. I just don't give my business to anybody. I give it to the one who I know has those values, has the right mindset, has the right approach. They might not be up there yet, but I'm going to help them. I'm going to help them get there. Because whether I've been around them enough or not, like on a personal level, I believe in them. Their aspirations, their values, they're aligning, or they're aligned completely, or they're getting there. But I know they are on the right track. They go to focus groups. They contribute here to the community this way. They value this in their family, their kids. This is how they educate them. This is how they treat them. This is how they show up for them. Without even saying words, this is how they show their actions. This is what they do when they are not around anybody. Your character truly shows when you are not around anybody, how you act. Good question. Is there any way to get funds while on a 1099, but my bank doesn't link or list on Plaid? Either way, you don't have to give me the answer because who are you banking with? If you feel comfortable, if you don't have to tell me. You don't even have to. But with this, yes, without Plaid, because a lot of it is automatic underwriting. I know how that all goes and what's looked at. If they don't allow it, if you've checked, that's the first thing. You want to go and check, call, go in person, however you need to do it. See if they link. Talk to a higher authority. See if they're able to link and open up and enable for you to link. Then that's one thing. If you can't, like there's a lot of smaller locations that they won't allow, community, etc. And that's just how it is, and there is no other way. I know I wish I had a better answer for you. I could tell you to go to another bank. I'm not going to start getting into all the ones that link to Plaid right now. It's not the purpose of this. But it's not always the answer to go to a different bank. It's just not all of them will link regardless of what you do. Your office, back office, whatever you try to do to see if they can enable it. And they tell you right away that no, we don't link because of this, because of that. So you just have to accept it. You can't change the bank or the location because you need to get funding. Doesn't work that way. At their cost, no. But in that case, there's different banks. I don't know if you have other ones that you have opened up, but you would want to be depositing into that account for the last 3 months at least, with at least 4 months of bank statements, or at least 4 months of business. Sorry. Other times it's 3 months. But a lot of the times you're going to see 3 months of bank statements with at least 4 months time in business. I'm not going to get into all the little grants. There's a few things that I need to be updated on my end. I haven't looked through them entirely. I've done this a lot where I've shared it with people, but I have a huge grant list, like a huge one. And I know them. I know how they work. I've helped people go through them and what they've gone through there. But I do have that documentation. I don't think it's in the bio. I might try to actually add it here now that I'm in a live. If I go to my entry here, what I would recommend, here's how to do it actually. If you fill out the form on my site, I think that's the best way. Or there's the grant opportunities video. You can type in on my YouTube channel. It might be the first link. It should still be the first link you can bring up. But if you go through any of those descriptions on my YouTube video, like, let's do it this way. Because I removed it off my link tree. I had to move some things around. I wanted to keep it that way for now. So if you go to one of my YouTube videos and you go to the description, if you scroll down that, you'll see it say grant opportunities. Click that link and it'll take you over to my document that I made together, and I'll actually bring it up right now. And there are plenty of them right here. Grant opportunities for 2023. I'm always updating this. And then I added quite a bit more. So if you scroll down to where it says 900 plus full grant list, I'll click here. And then everything that's been put together right here should be there. And you'll be able to access this by tabs. So just read the details to it, and we'll give you things on business grants, women grants, felon friendly, emergency, grant resources, trucking, agriculture, restaurants, uh, by different states, and more. And even if you don't use that, there are some before it, and then the ones that are before it are even added to that. But microloans is another option. You are welcome. Let's do about 30 seconds. I'll reset the time because we've had questions, but I'll get going here soon. I haven't had breakfast too. I can hear my stomach growling. Marco, walk to the kitchen. I'm waiting for the oatmeal that you've been having every day. Make myself some oatmeal with blueberries, strawberries, banana. I might put an apple. Apples like an every other day type of thing. Even bananas. Bananas are usually what I want to put every day. It's just a good texture when you bite into the oatmeal. Then I'll put like walnuts, cashews, peanuts, granola, Quaker Oats, granola, all the stuff that I can get from like Costco or other places you could get, and then pour that in there. I put syrup too. I put honey syrup from like Costco, or it could be from anywhere else, but put a little bit of that, sometimes a little bit more. Mix it all in, all hot, ready to go. The oatmeal. Sometimes I'll add other uh, fruits into it, but that's what I'm gonna go have in a little bit. Does anybody have any questions? Okay, that's where I would leave it. Appreciate you guys. Thank you for tuning in. I know you guys are busy doing your things too. Drop in here from time to time. Maybe it's later in the afternoon when you do watch, and it's okay for you. But appreciate you. Very grateful, thankful. Don't take anything for granted type of person. Very non pressure, structured. Uh, don't mistake my weakness, my kindness for weakness type of person. Don't ever usually don't get mad at all or upset. But I just want to make sure that you are accountable and responsible. And usually it's more concerning is the characteristic traits of the other person on the other side, because as a business owner, you don't normally work on those things. You don't work on a lot of like value ship, or you do, but it's not like you pay enough attention to personal development and what that has to do, because you're working, but you go away from that. In entrepreneurship, then it becomes a bit different. But not to say that it isn't over here. Not every business owner is an entrepreneur. Not every entrepreneur is a business owner. You can interpret that in many ways. So, we have a comment, so I'll stick around for this. Oh, we have Andy. I saw you come in here too, Andy. How's your day going? Yeah, and I saw the questionnaire. I've been busy earlier today. Like I said, I had to review quite a few credit pulls, and then I had to do other forms of bank statements. Essentially, I was catching up from things that I didn't get done last week, which is normal. So after this break, do a few things. I may get back today. If not, hopefully as soon as tomorrow. So I'll try to get that over. I'll try to get it to you as fast as I can today. I'm going to go take a break in a little bit. Yeah, you're welcome. Y gracias también por estar aquí. Thank you very much, guys. Yeah, sometimes it doesn't let you from here. So viralfundingsolutions.com is where I would go, but you guys can also send me an email. First name Michael, Mich, A as in Adam, E as in Edward, L, at viralfundingsolutions.com. Any last comments? I'll stay around maybe for a little bit. I haven't had my breakfast and I still have to do a few things in the afternoon. $30 and counting. Okay, let's see. I think that's where I'm going to then put it. I know I said 30 seconds, but I appreciate you guys once again. All information in the bio. Link click down below in the description. There will be more resources. The questionnaire form is the best place to begin with, so you can get a very highly personalized and customized email response on your best funding option and options, thoroughly broken down like nobody else's business. I'll show you everything, even in like a PDF format. This will be properly put together for you and your needs, and I'll show you what is the best and most recommended thing to do. All right, everybody, take care. Have a great rest of your Monday and afternoon, and make it a productive rest of the week. And continue to stay focused, challenge yourself, and move forward. Oh, I see a comment. One thing. Okay. Yes, that's where you want to look at grants or other opportunities in the description of the video. And in the description will be there. If sometimes it doesn't have the grant opportunities in the description because I move things, but it should be in there. Gerardo, you're coming in at the tail end, my friend. I'm about to get going. This happens a lot, and I know I've had some people who do come in at the end. I'll give it a couple more. I'll give it probably 30 seconds or so because of who is in here. Yeah, I gotta get back and post here. Then I gotta go there, here. You too, Gerardo. Appreciate you. Thank you. I have to understand more. Let me go through, fill out the questionnaire form as Andy has, as Gerardo and others have. So I need to know what it takes. From when I see that, I'll have a better understanding. And then you can tell me a little bit more about what you're trying to consolidate because we're running out of time here. All your debt and fixing your, like the type of debt, too, that would be helpful. Too, that would be helpful. Yeah, and if your vehicle is also like the main revenue generating way of getting income, that's a big block. And if you don't have enough vehicles or for whatever it is you're doing, uh, if it's not in the link tree, what I would do is email me. I put the email. Let me put it again one last time. So do this. Email me. Let me know this is you from TikTok, and I will respond and then send you an email with the questionnaire form, very likely, and perhaps other forms if necessary. Fill that out, and then I'll be then able to evaluate. But for now, this is the best place to leave it. Calls, guys, that doesn't make sense. Like that's very traditional, and it just doesn't make sense in this world. As busy as I already am, like even if I weren't, I couldn't live with myself just doing phone calls and phone calls with people every single day. I'm not the best front end person. I can do it very, very, very well. Not saying that I don't dislike that. It's just I'm more of a back end. Like let me review, let me send this offer or let's put this offer together for a client. And if I have to converse with the person, you, at that point to discover a few more things at that part of the process, that's where I do the best work at. Reviewing. The front end work like this, like that, like there has to be a place that makes sense, that it's very energy and time efficient. And so I've perfected, I want to say, I don't want to use the word perfect, but I've really refined it over many years. and I know what works and what doesn't, and how to make the best use of my energy and time. Because at the end of the day, what you guys have to understand too is if you're going to invest, don't always invest into one business or one project. Invest it into different. Don't put everything all in one place. Be the best at that. But if you have other like micro evolutions or things you're putting your focus on, how will you ever be able to do that? Even for about an hour or two, if you don't find ways of putting your business structure done correctly, and you can't be for everybody and anybody. And if that were the case, and if I were just accepting anybody and everybody, oof, I wouldn't even be doing this anymore. I'd be gone. Because as an introvert, like I wouldn't be able to do this. Like there's salespeople, extroverted people, if not introverted, whatever, that may be able to, but are they just putting up with it? Are they getting out of their comfort zone, but they're not growing as a person? That's the problem. You can get out of your comfort zone. You can train anybody to be a salesperson, but are they growing as a person? That's what I look for in people. I don't look for just growth in people telling me they can generate $1,000 every week or every $50,000 a month. I want to also know who the person is and how they're growing, because if you're just putting up with the work because you're making money from it and that's it, at what costs? You're costing the people you're helping if you are. If not, okay. But you may also be costing yourself as a person. And that's what matters more. If you didn't have this work field, who would you be? That's what I want to know in the person. That's everything I'll leave you guys with. Take care.